Hey everyone, Bitcoin and altcoins have finally seen some real action again since the start of the week. We've watched Bitcoin move around the $80,000 mark and above, and of course that sparks a bit of hope that we could be heading higher soon. Where this push is coming from and what you should be ready for this week, that's what I'll talk about over the next few minutes with Oliver Michel from tokentus. Great to have you here.
Hi.
$80,000, $81,000, and right on time for our 150th anniversary episode. That really does make it a little easier to read the chart, like you wrote this morning. Is there actually any reason why this positive momentum is showing up now?
Well, Joanna, the US indexes hit an all-time high, and they've basically been printing one after another, and last week was pretty busy when it came to numbers, and while at the same time it stayed quiet on the Iran conflict. And at the end of the day, when you add it all up, Bitcoin and with it the altcoins get a nice little push up toward 80,000. We were even a bit over 81,000 this morning, 81,300, but still that 80,000 area is an interesting level. If we can get through it and hold, there's a lot of upside potential. But when you boil it down, you've got to say it's kind of a make or break area. And that's what we want to dig into in detail today.
We saw some economic data last week, US GDP, consumer numbers, and a few earnings reports. And like you said, up until early last week, things were pretty calm in the Middle East. How are markets pricing in those positive signals right now?
Yeah, like I said, it's trending up. You have to separate the markets from the real economy, and we'll do that in a second. If we're talking US indexes, they're humming. They've got momentum. And we already talked about which indexes the Magnificent Seven sit in. We got numbers from 5 of the 7, so of course that pushes up indexes like the S&P and the NASDAQ. We've seen that, and unfortunately crypto can't really keep up right now. But if the US indexes cool off a bit, and the caravan goes looking for new oases, and maybe lands on crypto, money will flow in there too, and we'll get that same kind of boost. I'm pretty confident.
Before we look at the FedWatch tool, a super quick note for our viewers. Just this once, next week we're recording the interview on Monday, a day earlier than usual, and we'll publish it then, of course. Just wanted to mention it before it slips through the cracks. That'll be episode 151 next Monday.
We kicked things off in March 3 years ago.
Yeah, and one more quick thing. Someone sweet told me that apparently a commenter wrote that the two of us actually can't stand each other. I mean, for 150 episodes, I'd say we're pulling it off pretty well.
Yeah, you kind of have to get used to each other.
Which also just isn't true. Let's move on to the FedWatch tool. Last week we saw the FOMC meeting, the last one with Jerome Powell as chair at the Fed. The big surprise was not that rates stayed where they were, that was expected, but that Powell said he's stepping down as chair, but staying on as a board member. So he'll still be part of the decisions, and honestly, that surprised me. I would have thought after months of political pressure over rate cuts, he'd be happy to be done. But now he's staying on the board. I think the last time that happened was like almost 80 years ago. That's got to throw a bit of an awkward wrench into things for the new guy, Kevin Warsh, right?
Yeah, like you said, Jerome Powell is stepping down as chair on May 15th when his term runs out. He's staying on the board, so he'll still be one of the 12 people making the calls. And his contract runs through January 2028. So about another year and a half. He can step down from the role anytime, of course, which a lot of people kind of expected. Because like you said, the last time a Fed chair said, I'm staying on the board, was back in 1948. And Jerome Powell's made it clear that as long as certain investigations into him are still ongoing, he wants to make sure that the SEC doesn't get dragged into this in any way. And that's why he's sticking around. So that
the Fed.
The Fed, so that the spotlight stays on the Fed and on that whole issue. So for Kevin Walsh, he got through the Senate Banking Committee with a really slim majority, and now he's basically headed to the final Senate vote. That'll definitely happen before May 15th, so he can take over on May 15th when Jerome Powell steps down. And like you said, it's not exactly ideal if the former Fed chair stays on the board and kind of hangs around in the background. So I would have liked him to get a cleaner start. We said it last time too, it's one of the most important jobs you can have in world politics these days. And there really should be a clean setup. Legally it is, sure, but in practice, it's not.
Powell also said he doesn't want to just fade into the background right now, and I'm sure he'll still have some influence on the other board members. And if the vote was already tight for Walsh, coming out of the banking committee, then that's going to make the start pretty tough. Powell also said the economic data just isn't giving you what you'd want to see for a rate cut. We also got US data last week. GDP for one, gross domestic product, didn't look that bad at first glance. Sure, it could be better, but we know the last few GDP prints have gotten tweaked again after the fact.
Yeah, last week we got the GDP numbers on Thursday, and PCE also came out Thursday. But Wednesday was, like I said, the FOMC meeting, and of course, like we'd expected, no change to the rate. What was interesting was the vote split. It kind of gives a little hint of where things could go. There's the rate decision, and then what I'll just call the statement. Basically, the board puts out a statement on the rate decision, and it passed with 8 votes. Keep everything as is, and back the statement as written. 3 votes said the statement should really drop the wording about an easing bias on inflation, meaning they don't back the Fed, hinting that it might be leaning toward a rate cut. Not more dovish, easier conditions, but more like hawks. They're basically saying, no rate cut with us.
No way.
Not under any circumstances. And then there was one who said like 25% no, 25 basis points. That's what should be cut. So 0.25%. He was obviously totally out on his own.
Sent by Trump?
Yeah, one of Trump's people. And the last time there was this much dissent on a decision in this 12-member board was 1992. So you can already tell there's tension, things are moving, and Powell said, near-term US inflation expectations have risen. I mean, that's no big secret. With energy prices climbing, the risk is inflation ticks back up in the short term, and we'll see that in a second with PCE. It's just there. And something else they changed in the statement is that on inflation, it's now phrased more strongly. The last release said somewhat elevated, now it says is elevated.
So not just a little bit.
So not like it's kind of going up, but it is elevated, and that's basically what the markets react to. That's why I put it in here as an example. So if there's when a rate decision comes out, first it's just a number, and then there's a one-page statement, and that one-page statement gets parsed word for word. And if, for example, that word isn't there, the markets move. Or if somewhat turns into an is, then the markets move too. And it's really interesting to watch how people try, word by word, to read into it like, what do they mean by that? And prices start moving even before Jerome Powell's press conference.
It's kind of like a work reference where you have to read between the lines to see what actually
exactly
happened. And compared to economic data that got cut by more than half on the second and third read, it feels a bit like splitting hairs, right?
Well, it's the most important central bank in the world. And when it puts out a one-page statement, every word gets kissed, and you've got to interpret every single one, and somewhat elevated is elevated. Meaning, forget rate cuts. We need to brace for rate hikes, and you can see it really clearly here. This is this morning's board. You can still see the next ones. The market says everything stays as it is. And then on April 28th, next year, we could already see an initial move in rates toward a hike, and then of course toward a cut. It's all speculation.
Yeah.
But you can see the market starting to react based on those comments. We also had GDP, you mentioned it earlier, Q4 2025. Got revised down to 0.5, and now the first read has 2.0 for Q1. 26, which on its own really isn't bad when you're coming from 0.5. Expected was 2.2, so a bit higher. Well, it is what it is. But after what we saw in Q4, the first read is nice, but we'll wait for the second and third read to see what comes out. And then we'll know what Q1 was expected to do, or what Q1 actually delivered. And last but not least, on Thursday we got the usual PCE inflation numbers, and here too you see a slight uptick. Previous was 2.8, expected was 3.5, and it came in at 3.5, so right in line. Same story for core without food and energy. We were at 3.0 last month in February, and then it moved up to 3.2 and 3.2, again right in line. It didn't really move the market much because we just had the meeting. These are the kinds of data that usually feed in, and nothing came of it. It is what it is. So we really have to wait, like you said up front. What's Kevin Walsh going to do? What can he in this 8+3+1 board move?
Either way, this isn't going to be an easy story. Some people are even likening it to the current spat with the Eintracht coach, but either way, they both have to deliver somehow to, calm everyone down a bit. This week, we've got the jobs numbers on Friday. Right before that, we'll get the ADP private sector report, and once again, there's a deadline or one that's just expired on the Middle East and a statement on where things stand.
Yeah, we always wrap up with a line on what's going on right now in the US-Iran conflict. And what definitely gave markets a bit of a lift on Friday was Donald Trump's note on May 1st. The war is over. The background is, in the US, there's the War Powers Act. Under that, a president who starts a military action has to wrap it up after 60 days. If he doesn't end it after 60 days, then he needs Congress's approval to keep it going, and Trump or the US government wouldn't get that these days, not a chance. So, on short notice, on May 1st, they declared the war over, since there's been a ceasefire since 4/7. And basically nobody's been shooting back and forth, so they're still within that window. And at the same time, yesterday, Monday, they announced this Project Freedom, basically escorting all ships escorted through the Strait of Hormuz, while still keeping the blockade on Iran in place. So they're trying to sit tight and ride this out for now.
Yeah, sort of verbally speaking, because there's obviously no such thing as a classic ceasefire there. You just have to see it as meaning you don't have to run to the Senate.
It's all a matter of interpretation, yeah.
A sales thing, as you'd put it. Let's take a closer look at the US indexes. You'd said before the NASDAQ and other indexes have gotten so overheated with all these new all-time highs, record levels, that it's probably time for a small correction. But right now it still feels like we're in full all-time high party mode. Is a correction coming, and if so, when?
I hope it does, because that'd be healthy, because it can't keep going at this speed. You can tell just by how steep it is. Sure, it's a positive move up, but normally it's a lot flatter than what we're seeing here. So at this steepness, it definitely can't keep going. You can see it in the RSI too. It's been overbought for a while now. It's just a matter of time before it breaks down like it does here and then keeps pushing higher. So yeah, that's what you should expect at this point. The Nasdaq is really a key trendsetter for crypto and the move. In my view, with how steep it is, looks like something you see in a late phase of a cycle, a business cycle. That's what this whole thing is about. We made the move up to 27, and that's been our target for many, many months. Last week we said we were bumping the target from 27,000 up to 30,000 points. That's basically where this whole thing is headed, and we're already above 27. And if it keeps moving at this speed, we'll hit 30 pretty soon. I'm assuming we'll see a little pullback here. It could drop down to 26.2 as support. That'd be the usual. Or maybe it pulls back to 27 if we push up to 28 first. We'll have to see. But I think a pullback right here makes sense before we head into the target zone with the kind of steep move, parabolic action, and a bit of hype. In my view, that's the last move we'll still see before, and I can only keep sketching this out, we get this rollover. So the Nasdaq is basically on its way straight to the final all-time high with a small pullback. I'm really just repeating what I said last week because you can see it clearly here. We've basically, since our last interview last Tuesday, we've had basically only green candles. Thursday, Friday, yesterday, all-time high. So what more do you want?
Well, the parabolic run, your heart probably would have loved to see that with Bitcoin last October.
Then it would have all been clearer. This way we have to keep guessing.
Yeah. What we don't have to guess is the trend, the performance of the S&P 500. It's running pretty much in sync, or really in sync, with the Nasdaq. And that means we've got the same all-time high vibe here too, new records. What does this move say about the classic market saying sell in May and go away?
Yeah, out of the 4 US indexes, the Nasdaq and the S&P are moving almost in sync. So we don't need to pull up the S&P here because the move is nearly identical. Nasdaq and S&P are basically tracking together. I found a pretty interesting bit of info about the sell in May and go away myth, basically for the S&P in the May to October period, because that's what it comes down to. You get out in
May.
You get out in May, you sit through the summer lull, vacation season and all that, and then you get back in early fall. Over the last 33 years, the S&P has gone up 25 times during that stretch. So that's actually been a pretty positive period where it would have paid to stay in, and the same goes for the Nasdaq. Meaning, if you look at this now and say, okay, a correction could come maybe in May, maybe it takes up the rest of May, and maybe it even drags into June. But bottom line, with that in mind, a move to a new final all-time high within the next 3, 4, 5 months is basically a given. So sell in May and go away, and then it continues again in October.
It's actually September, according to the saying.
Yeah, well, that's this idea really backs up that this version, the way I described it, could happen. So we're totally on track here.
Let's take another look at the Russell 2000. We've got new highs here too, but the curve isn't quite as steep as what we've seen with the Nasdaq and the S&P. This one's got a bit more of the, just to mess with the viewers a little while I scribble on your chart, this one's more of a sideways stretch.
Yeah, we've got a strong move up here too, cracking that. All-time high marked here is really important, but this is already starting to look more like a cooling off. toward a possible correction. You can see it down here in the RSI too, so it's not above the threshold anymore. It's already drifted a bit into the darker zone, and yeah, you can basically see that little dip before it kind of pushed back up again. And we got an all-time high here too. So the Russell isn't far off, but its move up, like the Nasdaq, just isn't as strong right now. And it's tracking more with the Dow again, because the Dow corrected pretty hard for a few days, but also clawed back a decent amount. So overall, we're in a pretty good spot here too. And you can see that urge for a correction, a quick cool down before it then heads toward the target of 2,800 to 3,000 points. And we adjusted that here too compared to last week, since 2,800 was our target and we already hit it. Let's adjust it to 2.8 to 3. That's possible, but first we might get another pullback down here and then move back up accordingly. And that's actually a pretty solid indicator. Yeah, money's flowing into risk assets, money's flowing into the broader market. That's what the Russell represents, and that's good. And it's a pretty good sign for our crypto.
So if we look at the big US indices, we can see the move up is the path of least resistance, and you just mentioned the rollover. We know how that typically plays out with lower highs and lower lows. That's one thing, but what's the fundamental reason behind it when a rollover happens?
Yeah, all 4 US indices are totally in line with our plan. There's really nothing to argue about, and it's been that way for over a year. We've been following the US indices on the way up. We were rooting for the Russell to break above its last all-time high. We've seen the big ones like the Nasdaq and the S&P blast way past their old all-time highs and start to look a bit parabolic. So yeah, it's all exactly like I said, exactly how we pictured it, how we anticipated it. But the flip side of that excitement when the thing rips higher is always the thought, that kink, that turn, there a rollover is coming.
And when that rollover hits, we just saw it in the charts, then it needs to make sense with an actual flow and a structure. How so?
Needs an explanation. Yeah, I mean, the structure of a rollover is pretty straightforward. The moment it happens, I say that casually, but with Bitcoin, I missed it. Casual meaning you start printing lower highs and lower lows. You don't get a new higher high, instead you get a lower high. And that already makes you go, wait a second. Then you get a lower low and you know, okay, roll over. You can spot it on the chart, but what's the fundamental reason behind it? I tried to lay that out here on this, what I think is a really, really important slide. Basically, there's a structural divergence, and that's a classic late cycle thing. Like I said, especially with the US indices, we're really in the late phase of a big, truly big, long-running cycle. And what's happening right now, given the situation, and we're mainly looking at the US, is the Fed. Like we've gone through in detail in the last interviews, when the Fed pumps money into the market, it hands it to the big banks. They make it available to the big banks, and the big banks usually pass it on as loans, preferably to big companies. That means loans get issued, and those big companies take the money and can go invest heavily again. Buy equipment, ramp up production, do that kind of stuff, and then make profits. And those profits, those results we saw last week, everything they reported was great. And the moment those profits get reported, that obviously means the
indices.
Stock prices go up, and when stock prices climb, the indices climb too. That's the logic. When the Fed pumps money through banks into the big corporations, small and mid-sized businesses or regular people might see some of it eventually, but nowhere near as fast as this. So it's mostly the big companies winning here, and they're also posting great results right now, like we saw last week.
But it also has to reach the consumer.
Yeah, and then there's the other side, the consumer we're always talking about. And in the last few interviews, we've given tons of examples. They're under massive pressure. Consumers are in debt. One example, 42% of all car leases aren't affordable anymore. They're being extended so they don't have to turn them in or end the contract. 42%. In the first quarter, 119,000 families had to leave their homes because they were foreclosed on. We've mentioned a lot of other examples too. The US consumer is doing badly. They're really under massive pressure. These are all record numbers. Most US families live paycheck to paycheck. There's nothing left in savings where you can say, I can make it 2 or 3 months. It's month to month. Inflation's going up. We just saw it in the PCE, energy costs and on and on. And last but not least, there are jobs. If you still have a job, then big companies that are investing in making profits might not share that good performance by, say, raising wages. Pay stays flat because more revenue with the same pay means higher profits. So the money isn't reaching people, and there's also a study in Q1 again, near record levels, on the number of expected layoffs, these layoff waves. Amazon says we're laying off 12,000 employees. That number is also at record levels. And here's the big shift. Joanna, the key point is, when consumers are under pressure, like I just described, then they can't spend anymore. They can't consume anymore. But you have to know that GDP, the way it's calculated, 68% of GDP is driven by Americans' consumer spending. And if they can't spend anymore because they're up to their necks, because they can't put out any more money, then nearly 70% of GDP that depends on the consumer
drops off,
goes down. So, and with that, we've basically got the US indices on one side, like the ones that, and on the other side, the real economy. That's the real economy, and this here is, in my view, kind of smoke and mirrors. And this divergence, indices up, but GDP down, leads to this. It's a warning sign, late in the cycle, meaning late in the cycle, whenever the Fed starts pumping money in and certain mechanisms kick in, you're late in the cycle, and then it snaps. At some point it's going to collapse, like when GDP starts tanking because of what's going on here. At a certain point, you just can't make sales anymore because nobody can afford to consume, and then those profits will drop off too. And then the economy, measured by GDP, goes into a recession, and the indices follow. That's exactly where we're heading. I mean, take the NASDAQ, the big names keep going up and up and up, pushing it higher and higher. We'll see it in GDP. It's not going to stay at 2%. We saw 0.5% last quarter. It's going to keep dropping. For now, Americans are still kind of holding up, just barely, but it doesn't take much to push their head underwater. And then you're basically about to drown, and that's what happens. It snaps, and the indices follow. And then the top end basically follows this whole range down, meaning we're sliding into a recession, and through that recession, the indexes trend lower, and in my view, it's going to be a pretty big deal. But Joanna, we've been saying for over a year that this is what's going to happen. That's exactly the point. So yeah, right now it's going up, everything looks awesome, but there will be a rollover. And that rollover is based on this way of thinking, and it's not some made-up model, it's reality. In the last big crises, it's played out like this again and again. So yeah, this is nothing new. And that's why I think we're at the end. These kinds of structures, these divergences always show up late in a cycle. And late in a cycle means the rollover is coming up soon. Just my personal opinion.
So you're saying that old market saying that the market prices in the future doesn't really apply here. Is that just because of this cycle or this part of the cycle?
This phase of the cycle, there are different phases in a cycle like this, sure. But the moment you get a divergence like this, and we're seeing it here, US indexes shoot up while we're getting all this bad consumer news, you know it's diverging. Trump gets up there and says everything's great, everything's awesome. Yeah, meanwhile, people don't know how they're going to make it through next month because everything's more expensive. They're losing their jobs. They can't pay their bills anymore. Their house gets foreclosed. So yeah, I think it's boiling under the surface. And you feel this kind of divergence right when a cycle ends. And the cycle ends right in that divergence. But I'm repeating myself. And we're heading into a recession. And that recession will end up making our indexes tank, and with them the underlying stocks, and then of course our crypto too.
Before any of that maybe happens, let's talk about something a bit more positive, Bitcoin. We've got Bitcoin up here on the daily chart. Like I said at the start, right now it's basically a fight around 80,000 US dollars. Early this morning, we were briefly above 81,000. So where do you see the odds now of a breakout after this pretty nerve-wracking sideways range?
Well, maybe 60-40 in favor of going higher. Yeah. I mean, I'm not going to sit here and say it's guaranteed to go up, but I'm also not going to sit here and say it's guaranteed to go down. It's always about probabilities. That's how the market works. And it's the same with crypto. We've been watching this area around 80,000. I'm saying area around 80,000 on our channel for a while now. And in these interviews too, we've always had 80,000 and 90,000 on the radar, pretty much from the start. And I've always said it's all just talk and sideways action as long as we don't get above 80,000. Now we've seen a nice move up. You can see the vertical line here from the last time we talked. Back then we said, okay, support around 76,000 would probably get tested. That was the red zone we had marked. And since last Wednesday, it's basically been pushing up steadily. We'd already tested that area around 80,000 twice. You can see it on those two blue arrows on the left. And the more often you test a level, the softer that resistance gets. And yesterday we pushed above 80,000, and this morning we were briefly over 81,000. So you can see this nice move up. So yeah, right now it looks pretty decent. Promising? Sure, but we definitely can't call it a sustained break through the 80,000 area yet. We need to wait a few more days. It's pretty clear this is the upside setup, a breakout from what I'll call the range. And yeah, there are tons of shorts sitting here with a short squeeze. This could rip higher really fast, especially since we're currently in the second biggest gap ever opened, basically 77.1 up to 84.2. We're in that zone right now trying to close it. And we're also slowly heading into the area, SMA 100. Yeah, that's that blue line. After that, we're already getting into the 50 area and then up into the retracement zone. So the move higher, like I said at the start, is getting teased. That doesn't mean we'll actually take it over the next few days, but we're in a pretty good spot. And if the buying pressure, the demand, were to show up now, I can see this moving pretty fast with a short squeeze, and then we'd at least get into this area, which I think could spark a relief rally up into, say, the 105,000 to 112,000 range. Those are exactly the key retracement levels before it either drops from here or pushes higher from here. Sure, we can't rule out that area either on the way down. There's stress in Iran. The Nasdaq is correcting hard, way more than expected. yeah, then we've got room to the downside into the 60s. You can see down here the 200-day SMA has now also moved down to the 60s. So yeah, that's possible. And of course the setup we had here with the bear flag, that then drops into the high. 50s is still on the table, but we're in a time window, like you said up front, where you can get a breakout either up or down, a real sustained move, not just these little daily blips, but where you get 2 or 3 solid candles that clearly say, now it's clear, we're going up, or it's clear, we're heading down again first. That call still hasn't been made in this sideways action. Today, May 5th, after 88 days of chopping around, and is still not here, but I'm feeling pretty good about it.
I could tell this morning. Normally on Tuesdays, I'm the one who drops the first post in Crypto Insights, and then I'm driving the kids to school and daycare, and then thinking Michel already posted. It felt like he beat me to it. And of course in the channel too, even if it's just those little snippets, the positive notes are coming in pretty much, I mean, not pretty much, literally in real time. So we're tracking those possible breakouts there too.
So to update the charts, I start at 4 in the morning. And when you're at it from 4 to 8, that's how long it takes. And you've got the ticker running on the side. And like the past few weeks, Bitcoin just keeps dropping and dropping and dropping. You finish one chart after another and think, no way this is real. Then this morning was honestly a really nice surprise. You glance over now and then, and it was climbing. It was climbing. I really hope we get that push upward now. That would back up what we've been saying for weeks, or really it'd back up my view. I still think we're definitely going to see a relief rally, meaning we move up into this zone, either straight away, or we dip first and then run up here, or even into the high 50s and then up here. But I think we'll hit this area for sure. And then we'll see there whether it breaks up or turns back down. That's just my personal opinion.
Before you can't see anything anymore, and since you're already on probabilities and calculations, how likely do you think it is we go back to the high 50s again, that pullback?
Yeah, maybe 10%, 15%. It's possible. If this is the path, then we'll see it. If this isn't meant as a bear flag, but more like it just grinds sideways with the right pressure, demand, and a short squeeze, then it goes higher. And then the FOMO comes back, people want in, institutions want in too. And yeah, then it can take off fast. It's just a small market by market cap. I mean, for us it's the most important one, but that doesn't change the fact it's small and you can move it a lot with relatively little money.
Okay, but 10 to 15% is, I wouldn't call it comforting, but it's pretty manageable. Let's pull up Bitcoin on the weekly chart again. Since Thursday, it's been really strong. How have the RSI and the MS MACD been acting here?
So here too, everything's playing out the way we'd want and the way we've been expecting for weeks. RSI and MACD are giving positive signals that the bottoming is done because we've kept talking about a bottom forming. And I can definitely imagine it's basically complete. You can see it here in the MACD histogram. We're now in the 4th week.
Green?
Green. So you can already see a clear shift. The moving averages are also spreading apart accordingly. So if this move keeps going, you can expect more green bars to show up in the histogram, and they should keep getting bigger. Here you can see it really well. The green line has broken out, but I always want to flag we've got that negative divergence between price and the RSI. You just can't explain that away, and that's why I think, yeah, we'll still see another push higher from here. But it'll probably top out here on the RSI, maybe a tiny bit above, and that's basically the room we've still got. So yeah, I can totally see a relief rally up to into the
105 to 110, you're saying?
And yeah, it'll most likely stall there with pretty high odds. And the chance we get a continuation rally which of course would be the best case thing I'd want. I'd rate like I did in the high 50s, maybe 5 to 10%, not more. I think we can hit the retracement targets with this last little bit Bitcoin still has to do, meaning it pushes up here. And then, possibly together with the US indices, like we said, for whatever reason is driving it, starts heading back down. So overall, in this phase we're in, it's basically all positive. Positive signals from the indices, a positive move up, but like I said, this divergence, this structural divergence late in the cycle, that applies equally to Bitcoin too.
Before we get into the fundamental news around Bitcoin, you just said you see the odds of a rally beyond the relief rally at like 10 to 15%. That's obviously not huge and yeah, maybe a bit sobering for some. But how do you see a real push on the altcoins? Do they have a better shot, in your view, at actually breaking above the recent highs?
Look, I'm saying the same thing again. The second Bitcoin starts creeping back up into that retracement zone, altcoins usually run faster. And like I keep saying, I can see the big alts getting back to their last all-time highs.
Not past that?
That'll be enough for now if XRP goes from $1.40 up to
break 3.
50 geht, that'd be nice. Or ETH at $5,000.
And beyond that?
Yeah, once there's more momentum behind it and we maybe break through those retracements, move into the 100 or 120 area and a new all-time high starts to set up, then yeah, altcoins usually rip even harder, no question. But we'll see. We'll see now. Like I said earlier, we're in a make or break phase right now and we'll know more soon and see it clearer. But right now it's, it's kind of wide open.
Chart-wise, we've covered almost everything, but of course, besides the charts, even if they're the focus right now, fundamentals still matter a lot too. What happened on that front last week?
Yeah, the biggest thing, quick summary, Bitcoin whales have been buying a ton over the last 30 days, 270,000 Bitcoin, and believe it or not, that's the biggest whale buy we've seen in 13 years for a 30-day period. Put that aside, the main thing I take from it is Bitcoin whales are buying, which is a good sign. Last week in the spot Bitcoin E ETF, we had a week. Inflows were $150 million. That's not much for a whole week, but last Friday we saw 630, meaning that 150 includes a 630 million inflow. So the days before were red, and yesterday, Monday, we saw 530 million in inflows. So that's 2 really solid days. And if it keeps up at this pace, we should see price performance move up and more green bars show up. And yeah, on the Clarity Act 2, there's just a ton of headlines. The key takeaway is there are positive rumors. They can get the final Senate vote done before summer and send the Senate-passed bill to Trump to sign. That's all I'll say on it for now.
Are there any official documents on that?
There are different committees and groups working on different parts of the Clarity Act right now, and everyone's got their piece. And there's mixed info on when what will be done. Sure, the hardliners say, we'll definitely get it done, and others say, we'll have to see. None of this is clear yet. Then the next person goes, no, it's totally clear. So at the end of the day, it's enough for me to say again what the overall vibe is from everything you hear put together. So you cut out the super good news You cut out the really bad news, and what's left boils down to this. Yeah, you can assume we'll get through May and June, which would obviously be great for one last push up here before it heads back down.
This time we've got no altcoins at all, which I don't know if that's a first in our 150 interview episodes. But we are looking at Bitcoin dominance because you can roughly infer from that what's going on with altcoins. Bitcoin dominance has recently climbed back above 60%. What does that mean for an altcoin season, a possible one coming up, or at these dominance highs? Is that basically way down the list for now?
Yeah. You can answer that once I'm done, because I don't really know that precisely either. It's just that everything's different this time. This is the dominance on the weekly chart, and I pulled it out far enough so you can see what it was like in the last cycle. Last cycle, Bitcoin dominance hit its peak right here. That's our number one. And Bitcoin cycle, top number one, we had a double top. Last cycle was in April 2021. So in April 2021, Bitcoin made its first top. And here you can see that even while Bitcoin was basically running up into that top, it shed market cap massively. And within 19 days, that was basically it. Like they say, everything flipped. And even though Bitcoin kept running up to its top, you can see it here, the altcoins caught up with a huge run and printed a lot of all-time highs. So a lot of altcoins made their all-time high at that first top, that first Bitcoin top. Here you can see it. This is the second top. The second top was higher than the first, if you remember. That was right here. That's where dominance had already dropped all the way down, almost to the low. And you can tell from that the first top, the lower one, based on all the indicators we also looked at in the MCD, was actually the real top of this last cycle. And here you can see, even before the top was hit, dominance started heading down within 19 days. In 19 weeks, the altcoins made their move, and some people definitely made a killing. Right here is the bottom for Bitcoin. Yeah? And then that's basically where the bull market starts in October 2022. We always track that too. Yeah. And then you see, the moment the crypto bull market kicks off, Bitcoin naturally leads the charge. You can see that really clearly here. And now at this point, we've basically got another high. If this is the one and this is the zero, we said it bounced off the 78.6 retracement. And we had this first phase where the altcoins were able to steal a bit of market cap from Bitcoin. And Bitcoin weakened, and that actually looked pretty good. But this move over here is huge. We kind of saw a hint of it once, like a quick pause. But you can see, if you look at the cycle again now, that was the cycle top, the supposed cycle top for Bitcoin.
In October.
In October. So if you look at it, how did Bitcoin dominance behave around each Bitcoin top? Totally different every time. So based on dominance, you really couldn't look at this line and say, yeah, obviously that had to be the top of this cycle. That's why I still think that I'm putting it at like a 5 to 10% chance that the cycle isn't over yet, and we'll see another top before it really sells off. But you can see it super clearly. We've had 6 green weeks now. And like you said up front, we're back above 60%. And it's always like that. When the market starts moving again, when crypto starts picking up speed, Bitcoin moves first. And that's exactly what we're seeing here. Bitcoin is leading. That's actually a pretty positive sign. And I'm betting that if Bitcoin goes into a relief rally and maybe pushes a bit higher, we'll get what we had here. Meaning Bitcoin keeps going up, but its dominance still drops. Back then it kept running to the top, but dominance fell. Anyway, and that's basically the dream scenario, that it drops here. And that setup gets a lot clearer once we break below 54%. That would be a lower low relative to that. And then it could slide down toward 40% dominance. Then we'd be down here. Bitcoin would be up. Altcoins would be printing new highs too. And overall it would all line up again. But the way it looks right now, not really. So I can't answer your opening question either.
At least you can't really tell where this could go next. So this time we're not just missing the altcoins. Sorry, Schwenki. We're also missing the colorful roadmap. But honestly, nothing's changed there anyway. So let's look at what the 80K level in US dollars actually means. Basically, like you wrote here, a make or break moment. Over the last 3 months, Bitcoin has climbed about 30%. And the big question is then, are we past the worst of this downside pressure, or is the nasty part still ahead of us?
Yeah, that's the question, exactly.
You've got to answer it.
I mean, that first point is already a pretty great one. We saw 60,000, and now over these 88 days...
80?
No, I mean 60,000 US dollars.
As a downside backup?
As a new low, like a lower low, supposedly a lower low. And since then, over 88 days of mostly sideways action, we're up about 30%. So yeah, 30% in 3 months. That's already saying something. So the mood can't really be that insanely negative right now. Mm-hmm. We've made up a lot of ground. Sure, if you're sitting in altcoins, yeah, not much has happened yet, but Bitcoin is up 32% since then. That's not bad. We're now in the zone between 80,000 and 85,000. I'm looking at it a bit more broadly, and when I'm online, bouncing around different platforms and checking out different analysts, it's getting clearer and clearer that there are two camps. Analysts are split between make or break. The phrase make or break has come up a few times in this interview. There's the make camp. And I should say this too, both sides have some pretty big name supporters. Mm-hmm. We had a similar slide a few weeks ago saying every scenario has different voices, but now we're past the wait and see stage. Of make or break, the call is about to be made. For the make camp, the base is in place. I'm in the make camp. The base is in. MACD and RSI are positive, like we just saw. We've got a relief rally going right now. That whole 80 to 85K zone. If we clear that cleanly, then we keep pushing higher, and we'll see how far it can run and maybe get a nice surprise. And then there's the break camp, who've been fixated for weeks on that 80 to 85K area, saying once Bitcoin's traded in that zone, the sideways move is done, it's a bear flag, and then it drops at least into the high 50s. Some say the 40s, and the real pessimists say the 30s. So that means we're sitting right now in this zone, kind of between 80 and 85,000. That's the difference from the interview a few weeks ago. Back then we were still a lot lower, and we said, okay, there are different camps, but now we're in a range where it's getting real and it's pretty clear. This is going to be make or break, so we don't have to wait much longer, maybe a few more days before it's clear which of the two camps is going to take control of Bitcoin's move. And in the end, be the one standing there saying, I told you so.
50-50, I'd say. So 50-50, and if you're saying we're really in the phase where it should decide whether this turns into a make or a break, then I'm curious what it looks like next Monday, Oliver, because next Monday is our next interview date, and I'm looking forward to it.
Me too.
And to all of you watching, we're looking forward to seeing you next Monday for our 151st episode. We'd love for you to be there, and until then, take care.